Is that what did we say a few months ago that Netflix needs to find their next Stranger Things? That could be it.
Yeah, it certainly is it's super popular. I think I read somewhere that it was the one of the top streaming shows they've ever had, and so it'll be interesting to see how the Stranger Things I guess finale that starts around December time. It'll be interesting to see.
I love this podcast because it crushes your dreams of getting rich quick.
They actually got me into reading stats for anything.
You're tuned in to the Investing for Beginners podcast.
Led by Andrew Sather and Dave Ahern.
Step-by-step premium investing guidance for beginners.
Your path to financial freedom starts now.
All right, folks. Welcome to Investing for Beginners podcast. Today, Andrew and I are going to take a stroll through the economy. We're going to talk about some of the companies that we think could be a good illustration of maybe how the economy is doing. There's lots of discussion about economics and what's going on, and this may give some insight, good or bad, into what we see going on with the economy. And we're not just picking the big names. We're actually taking a stroll through some smaller names or some maybe diverse, different kinds of companies. So with that, let's go ahead and start off with the retail giant, Walmart. What does Walmart tell us about the economy right now?
So Walmart's actually doing pretty well. Earnings just came out November 20th. They posted 6% sales growth, constant currency. I think that's pretty decent for them. Profits up also close to that number. E-commerce is a big one for them, surging 27%. And international, they said it led with 11.4% sales growth and even higher operating margin growth or operating income growth. And the comp sales in the US were 4.5%. So kind of interesting. Some of the factors that they discussed as the reason for that great performance. They said they're increasing market share, especially in grocery and general merchandise, by appealing to a broad customer base. And also there's a notable increase in engagement from higher income households in the United States. So is that a good indicator or a bad indicator? Because on the one hand, Walmart could be killing it. On the other hand, is it that rotation of if higher income households are rotating to value, everyday low value that Walmart provides? Could that be a canary in the coal mine almost? It's hard to say.
Yeah, it is hard to say. I do remember hearing something along the lines that management was saying that they were noticing two trends. One, that the cart size, so the amount of money people were spending per cart was going up, and also that the price per item was going up as well in the cart. So that could have that could tell you that maybe inflation is still impacting people on the grocery front or other parts of the retail that Walmart calls attention to. So I think it's interesting. I think Walmart would be a really good barometer, if you will, of how people feel about the economy or whatnot.
Yeah, and grocery is kind of going through an interesting change. And this is kind of anecdotal, but I've seen content out there, people talking about protein being one of these things that a lot of people are paying a premium for. So I know when I first started in the stock market, when you mentioned grocery, you always thought of very low revenue growth. You thought of inflation type as your upside for groceries because people aren't going to pay up for groceries. And then Whole Foods came around and kind of flipped that on its head with the whole organic products. And now you have protein potentially being that next thing. I don't know how much you've seen the different kind of items they have, but I can tell you from my pantry, I've got protein cereal. I have protein pancakes. I have protein, obviously just regular protein like a beef jerky and things like that. Protein drinks. I have a wide variety of protein drinks if you want a protein bartender. So there's just, and I've seen like protein cookies and there's just so many different protein, the bars, obviously. So many of those products, you wonder And I'm not saying that Walmart called out protein. I'm just saying, just as a general kind of overview, if the economy was really that bad, would protein be something that people would be paying up for? Right. Something I wonder.
No, I certainly don't think they would. And I probably would maybe hesitate to speculate that maybe the middle class to people below that would probably not be paying up for protein. I know that there's, of course, people go through different stages, waves, fads with dieting or how they consume food and whatnot. And protein, yeah, to your point, you can't go on Instagram and not see, at least, 3 out of every 5 videos somebody's talking about trying to get more protein. I follow a lot of people, chefs or people, making food, and every one of them is protein related. How to make a pizza with, protein, how to, how to
Right.
make cookies with protein, and how to make a high protein breakfast, all those kinds of things. So it is definitely in people's minds for sure.
Well, I just recently learned how to make a protein Crunchwrap Supreme. So, Mr. Steven and Mr. Dave, just keep
Yeah.
that in mind if you ever want to come visit.
Okay. All right. Good to know. Very, very,
What's the next?
very, very
What's the
helpful.
next company? Yeah.
The next company we're going to look at is Shopify. So the ticker for this company is SHOP. And this is the e-commerce business that is based out of Canada. They were one of the pandemic darlings during COVID. They soared to incredible heights. And after the pandemic, they fell to incredible lows. And now they're kind of working their way back up there. This is not a company that I have followed closely much. We have worked with them, in a business sense a few times. And it seems like it's a fantastic platform, but it is driving the e-commerce trend that is going on in the world today. And, the whole, what would you call it? The side hustle nation or the side hustle culture. A lot of that is being stimulated by what Shopify has done. And I will say they do make it easy to open, to start a website and to build everything, especially if you're not tech related like myself. So, kind of looking at the numbers for the company, they saw a 32% increase in their gross merchandise volume, which is a really good indicator. That means that people are buying more stuff on their platform. They also saw revenue up 32% year over year, which is really, really high, very, very strong. And they also saw merchant solutions revenue grow as well, and that's their payments platform, and that grew 38%. And they saw subscription revenue grow 15%. So all in all, if you look at the numbers for Shopify, they see a continuing strength of their platform and what people are doing. And if you look at management's discussion on maybe why some of this is happening, it's because they're definitely positioning themselves to be one of the leaders, if not the leader, in the e-commerce landscape. And they have developed all their tools and worked really hard to make all the platform as easy as possible as they can. They're also incorporating AI. Toby Lukey talks a lot about AI and the advantages that the company has. And they've been partnering with companies like ChatGPT and Microsoft Copilot to enable things to make it easier. And in addition to working with more of like single entrepreneurs, people like yourself and I that, are entrepreneurs and others like them, they've also been upping their enterprise game. And that means that they're working with bigger companies. So primarily they have focused on small to medium business people, but some recent clients that they've signed, which are pretty big names, Estee Lauder, Elf Cosmetics, Mattel, Aldo, which I'm not familiar with, and FanDuel. So they've signed some pretty big name enterprise customers, which I think bodes well for their company. And so this, I guess, you can contradict me if you want, but it really makes me feel like that even though people may feel like they're maybe stuck in their 9-to-5 jobs, or that maybe they're not making as much money as they want, that Shopify is seeing success in enabling people to either start side hustles or to start being their own boss. And I think that is something that has grown tremendously over the last 5 years, and I don't see that slowing down.
Absolutely agree. And I think it's not a company we're planning to cover today, but if you look at Meta and just the way that advertising revenue has grown for Meta, it's very natural for people to sell physical goods on Shopify and advertise for their physical goods on an Instagram or one of Meta's platforms. And you see both of those growing together and growing at a really, really high rate. One thing I did find interesting, and these are really great growth numbers. International GMV growing 41%. That's huge. That's the second company now out of two that have mentioned this whole international growth. And the stock market is so US focused because so many of the companies are headquartered here. But is that something that you start to see become a factor again? I know coming out of the pandemic, GDP for the United States was higher than it has been historically, and pretty high compared to some other countries. Do we start to see some of that reversion? And I think that's an interesting trend to follow, not just because it's interesting, but because there could be some profit opportunities there, some investment opportunities there that people aren't looking at right now because everybody wants to talk about AI.
Yeah, exactly. And to your point, the company is seeing success outside of the borders of the United States or Canada, where Amazon actually has been seeing some struggles. If they look outside of the United States, they have been growing in the US, but internationally, they have not been doing as well. And I mean, it's all relative, but it's still they're not performing as well. And I know, Brazil being one of my focuses, Mercado Libre and Coupang and C Limited have done really, really well in Latin America, whereas Amazon doesn't have much of a presence there at all. So I think the Shopify seeing success outside of their home border, you will, bodes really well for them going forward.
Yeah, it certainly makes sense. So I'm going to move on to Netflix. We're going to go from consumer goods to something more digital, the streaming industry. This is from the quarter ending in September, the end of September. So, a month has passed since these earnings, but this is still, I think, relevant. Revenues have jumped up. We're talking about 17% in the quarter, and operating profit taking a small dip. So operating margins down. So operating profit hasn't grown as much as revenue, but still growing at a double-digit rate. What is before we dive into the rest of it, what is your take on that 17% revenue growth in the September quarter for Netflix?
Well, that sounds really, really strong. And I guess the first question that I would ask is that still is this still a result of the account sharing crackdown that they've been doing? Are they still benefiting from that, or have they moved past that now?
Yeah, those are great questions. Yep. So the two things that they did point out, number one, a record timeshare for the TV in both the US and the UK. Doesn't mention about the account sharing in that factor. And then the other one being their best ad sales quarter ever. I remember that was a huge controversy for them several years ago. Do we go ad platform? And investors were torn between, do they just stay as a SaaS company, strictly SaaS, or do they go into advertising? That appears to be paying off for them right now, with that strong engagement for them. They mentioned K-pop Demon Hunters being really successful, and I feel like I've heard about that everywhere I turn. So that what did we say a few months ago, that Netflix needs to find their next Stranger Things? That could be it.
Yeah, it certainly is. It's super popular. I'll admit I've watched it twice. I think my daughter has seen it at least half a dozen times at least. And yeah, it's it's been really, really popular. I think I read somewhere that it was the one of the top streaming shows they've ever had, and so it'll be interesting to see how the Stranger Things, I guess, finale that starts around December time. It'll be interesting to see how that plays out. We're already starting to see ads on TV for the show, and they're including characters in different commercials and things of that nature. So I suspect that that's going to be huge for them for that quarter.
How do you think this reflects on the streaming industry as a whole, or do you think it's not a great indicator?
I think I would probably position it this way. It's hard. I feel like, and correct me if I'm wrong, it feels like Netflix is a must-have, whereas some of the other ones are it'd be nice to have. Like if you were going to cut anything, Netflix would be the last of those to go. Like people would you keep your Apple TV subscription? Would you keep your Prime? Would you keep your WBD or HBO? Would you keep your Paramount Plus? Like all these different ones, I don't know if I know they aren't doing as well numbers wise as Netflix is doing, but it feels like Netflix to me is a must have, whereas the other ones maybe don't rise to that level.
Yeah. I mean, I'm the guy who lives under a rock, so obviously I am opposite of everything you described, but the numbers are certainly pointing to Netflix dominating. They compete against all types of entertainment and media. That's everything from social media all the way to traditional TV, and they are obviously gaining share in those areas. So that does tell you a lot. And I think I hope they continue to report that KPI, because that seems like it would be critical to their success moving forward.
Yeah, for sure. Yeah. I think that's a good highlight of maybe how, like, looking at Netflix probably gives us an indication that things aren't really bad, because then people would potentially be cutting that and we would start to see a drop in revenue potentially.
Mm-hmm. Yeah.
All right. So maybe we can move on to the next one. So we're going to switch complete gears and go from streaming to banking. So this is the world of finance and really how we all use our money. We all have to, well, we don't all have to, but the vast majority of us have to work through a bank to buy things, to pay our bills, to receive money from our employers and whatnot. So the bank we're going to look at is JPMorgan Chase, which is ticker JPM. This is arguably one of the largest, arguably one of the best banks in the United States, run by Jamie Dimon. They reported earnings early in October. So this is a little bit dated, if you will. It's about a month oldish or so, but they did report a pretty good quarter. So they saw a growth in revenue. They saw 47.1 billion in revenue, which is up 9% year over year. They also saw their credit grow as well. Their assets under management, which is investments, grew 18% year over year. That's $4.6 trillion. And they saw their long-term net inflows grow by 72 million. So that means that people are putting money into their accounts to invest. And those are all good signs for all of this to continue. And one of the things that they did call out in the call is that they feel like that the credit of the consumer is still pretty good. They did look at like the 30-day, 90-day NPLs, which means non-performing loans, and those actually stayed steady for the quarter. So that helps indicate that even though there may be some signs on the horizon that things aren't going as well as everybody would like, it appears that the consumer is still remaining strong. They're still spending money, they're still investing, and they're using their credit fairly responsibly and are not defaulting on their loans, which would be a good indicator that things are probably doing okay.
Yeah, MPLs, that's kind of a big economic indicator. I think when people talk about that, they talk about all the big banks, but then they also mention like the American Express and Discovers of the world who do these credit card loans. And when you start to see defaults in that area or in car loans like an Ally Bank, or just general credit cards with the big banks, then that can be signs of economic trouble on the horizon. Doesn't sound like JP Morgan is experiencing that whatsoever.
No, not at all. The only downside that Jamie called out was in the call was that they reported an elevated charge off, so $170 million from some apparent fraud in a securing lending facility, and Jamie kind of described it as one cockroach in the coal mine. And he said there were some other aspects that the bank needed to tighten down on their security to help reduce some of the fraud that they are seeing, but he didn't think that was an indication of any broader trouble in the economy or within the bank itself.
I do remember Howard Marks called out that comment by Jamie Dimon. He had a great memo recently. You should go read it if you haven't yet. Howard Marks, everything he puts out is really good. All right, McDonald's, the good times, good memories burger place. Maybe for some of you, I know for me, maybe not for the rest of you. I kind of see them as the road trip indicator, but that's just Andrew's opinion. That's not anybody else's. Global comparable sales. So how did their restaurants do unit by unit? 3.6% year over year growth. And in the US, it was 2.4%. So those seem like lower numbers. I don't know, especially in the US, not growing even above inflation. I don't know if that's par for the course for the company. I admittedly do not own the stock. I've never really looked seriously at owning them. It's always just kind of been an expensive stock, but I never remember seeing like huge growth numbers out of them. But a lower growth, so the road trip indicator is maybe not great right now.
I did read recently that McDonald's is changing part of their menu, and they're starting to offer the dollar menu and the $5 menu are coming back, and because I think they feel like that people are feeling the pinch from food, and so that is McDonald's way of trying to fight back, because they have seen. I don't have the numbers in front of me, but I believe they have seen quite a bit of growth in the cost of what they're selling, and they are charging more. And so you see all the time people complaining, I went and, got meal, for me and my child, and it costs us $22, for two people at McDonald's. So McDonald's does seem to be acknowledging that their consumer is needs some help, and they're trying to help.
Yeah, that's a good point. Adjusted EPS flat year over year, so they're not growing with the rest. So we have 4 winners and 1 loser,
right,
so far.
Yep. All right. Let's move on to Home Depot. So the retail giant, if you will, in the home repair, home fix-it building space, ticker HD. So the company reported earnings actually just recently, a few days ago, and their total sales for the quarter was $41.4 billion, which was an increase of 2.8% from the prior year. But they did note that $900 million came from a acquisition that they did recently. So maybe it was organic growth was a little softer than indicated. They did say that their comp sales increased 0.2% overall, with U.S. comp sales up 0.1%. So those are, numbers, I would say. Not a company I follow closely, so I don't know if those are great numbers.
They're bad.
But okay. All right, then. There we go. From the expert, they're bad.
Yeah.
All right. A couple things that they did call out. They did say that they think that they're in challenging market conditions for Home Depot in their industry, but the management believes that the company itself is growing market share, and they threw out some different different reasons for that. They also highlighted the fact that they've had some positive performance in big ticket transactions. So items over $1,000 which was driven primarily by categories like appliances and portable power, and I would imagine lawnmowers and things of that nature. So they did see a bigger ticket items, which is helping with that. They've also initiated an organic pro initiatives. So one of the things that I saw an ad for the other day, which I thought was kind of surprising, is they are offering courses or classes for people to go at Home Depot and learn a trade. So learn how to be a carpenter, learn how to be an electrician, a plumber, and so on. And Home Depot will pay for it. So it's free. And so I thought that doesn't necessarily impact their bottom line, but that could be future. I think it's a brilliant idea because those could be future customers, because most people are going to be fairly grateful for getting that opportunity, and I think it's a much needed opportunity for a lot of people, and that's awesome. So yeah, that's kind of what I saw from Home Depot. So I guess compared to McDonald's and now Home Depot, and then maybe looking at Walmart, like if you looked at those three kind of retailish type businesses, what would be your conclusion?
That housing is crushed right now. People aren't going out to eat, and people are getting value. I mean, there's the tie, right? Walmart and McDonald's. People aren't going out to eat, and so they're cooking more, and so Walmart's getting more grocery. One of the things they called out, which I thought was interesting here, so there's so much pressure in the housing market that there's 40-year lows in housing turnover and adjusting home prices. So Home Depot repair and remodel is very closely tied with the home building industry as a whole. Probably not super hard thing to imagine when affordability gets pressured, so does the industry. The question moving forward will be, is that systemic, or is it just another housing cycle? So I know like one of the guys I know is usually pretty bullish on housing, and he just went bearish and sold one of his stocks that he was going to hold for the long term. So I think that might be a sign of the bottom, but that's just complete speculation on my part.
Right. But it could be a sign.
It's like the inverse of the Uber driver tells me about a stock. That's a sign of the top. Nitty gritty value investor bails out of a housing stock. That's a sign of the bottom.
Yep, exactly. The signs are everywhere.
Uber growing like a weed. Feeling like a fool every day. I see that. Trips up 22%, marking the fastest growth since 2023. Gross bookings grew 21%. Adjusted EBITDA is up 33%. These are huge numbers. Grocery and retail achieved a $12 billion gross bookings run rate. Lots of growth, lots and lots of growth. And this was for the quarter ending November 4th. So all throughout the government shutdown, Uber was thriving.
They were. Oh, that was a way a lot of people earned money during the pandemic. And the delivery business since has really helped sustain them. And I think it really has grown maybe faster than some analysts probably expected. I mean, that is one of the things I think coming out of the pandemic has probably done better than a lot of people may have thought it would. Kind of lumping, DoorDash and some of the other businesses, Grubhub and some of those other ones into that bucket. But I think the Uber delivery part of it, I think, has been a surprise to a lot of people.
Yeah, and including yourself, right? Yeah, me too. And their strategy of really doubling down on the whole Uber Eats thing. I remember lots of smart people, and myself too, I was doubting. I didn't think, what's the point of getting into this business that's so bad margin, it's losing money? Why would you get into the food delivery business? They're calling out in the earnings call that cross-platform consumers, so think of somebody who uses Uber for rides and then also Uber Eats, they're spending 3 times more than single product users and retaining 35% better. So does it lose money? Sure, maybe, but is it being made up for in other ways? Seems like that's the case. And I know if you compare Uber to Lyft, it's like night and day at this point.
I would probably say at this point that Lyft has definitely fallen into a strong second place and is going to be hard pressed to catch Uber at this point.
Yeah, I mean that's definitely Wall Street's take on them. It's not been a good time to be a Lyft stockholder.
No, it is not at all. So how do you think that? Do you think that has any indications of maybe how the economy is doing?
Yeah, hard to say. I mean, I know for me personally, I'll use Uber if I'm traveling. Will be like my biggest kind of use case for it. They call out a new record over the Halloween weekend. So to me, that sounds like, maybe people going out and partying and then getting an Uber on the way home. Maybe it also sounds like a lot of people just ordering in, right? It's like, oh, I got to go run a Pizza Hut and go get a pizza. Well, let's just Uber Eats it. So those things are they as holiday driven where it's almost like a restaurant? You want to look at those holiday performances and that kind of indicates over the entire year where the business will be at. I don't know if that's the case or not, but still, I mean, these numbers are ridiculous. Like 21% in gross bookings. That's really good. They're already a big business. So whatever they're doing, it's working.
Yeah, sure. I guess I would also wonder, is the growth is that also stemming from the fact that more people are turning to them to either supplement their income or to become their own boss, so to speak? And maybe that's part of the the entrepreneur economy that has been taking hold over the last 5 or 10 years. Let's switch to the last company we're going to talk about, which is UnitedHealth, ticker UNH. So this is the insurance giant, and this company has gone through a lot of change and a lot of upheaval over the last year or two, and it's been, in some ways, very, very controversial. We're not going to touch on any of that. We're just going to kind of look at the numbers and maybe talk about some of the things that are going on with the company. So if we look at the latest quarter, which was reported in October, we saw adjusted earnings of $2.92 for quarter three, which was slightly ahead of expectations. They did $113 billion in revenue for quarter three, which was a 12% year over year growth. And they also saw a growth in domestic membership expansion. So over 780,000 lives year to date, and they are reaching over 50 million total domestic members. So the numbers, I think, are probably okay for the business. The big, I guess, hangover for the company, and Brett and I actually talked about this a little bit the other day when we were talking about Oscar Health in a podcast episode that'll be out soon, the ACA hangover. For those unfamiliar with what's going on, the ACA subsidies that were extended after the COVID pandemic are set to expire into the new year in 2026. And there was a lot of infighting, bickering about what to do about that in the last government shutdown. And they're going to have more discussions on this. But if it's not approved, then a lot of these subsidies will fall off. And there's a lot of worry that people will see growth in their premiums, the amount that they pay for insurance. And in one of the key takeaways here was that they are projecting that this could lead to a 1 million member contraction in 2026, and 2/3 of the reduction in ACA enrollment, which would be those are big numbers to potentially lose for a company like UnitedHealth, and that could definitely have an impact on their revenue, earnings, everything across the board. So this is something that's kind of hanging over all the health insurance businesses, not just UnitedHealth, but it is something that will have a direct impact on people's wallets and the amount of money they have to spend on groceries and Netflix and everything else. So it does bear watching to see how this is all going to play out over the next month or so, and to see what's going to happen.
It's concerning, not going to lie. I mean, I don't know. We can't really sugarcoat it. How many businesses, hospitals, doctors' offices are UnitedHealth is one of their biggest customers, right?
Right.
I'm looking at their income statement, operating profit down 50%, going from over $8 billion down to 4.3. And this is before everything you're talking about is about to shake down. So they are, I mean, not like hemorrhaging money, but you are not a successful business if you're halving in profit. And if that trend continues, pretty soon you're not going to have a business, right? So yes, they're increasing premiums, and premium growth is good. Revenue growth is good. It doesn't bode well. I don't know how it's going to play out. I am far the last political expert you'll ever meet in the world, but yeah, not a good sign.
No, not a good sign at all. And this is definitely something to keep an eye on, because this will have ripple effects back into the rest of the economy. And even the 7 other companies that we looked at today, from JPMorgan to Netflix to Shopify to McDonald's, if this goes through, that meaning that the subsidies end, then that'll filter back into the economy and it'll have an impact, and it'll hurt people, and that'll be something that we'll have to keep an eye on as this goes forward. So this company could be a good bellwether for how the economy does in 2026.
Yeah. Fun fact, if you had to guess, how much in insurance benefits and claims do they pay out per year?
Per year?
Yeah.
Having no idea, I'm just going to take a wild stab and say 75 billion.
Yeah, I would have guessed something like that too. For 2024, it's actually 264 billion. Over the last 12 months, it's almost 300 billion. So that's a lot of money flowing into healthcare. And that's just one company. That's UnitedHealth. We're not talking about Anthem, or I guess formerly Anthem, Blue Cross Blue Shield,
Right,
and some of the others.
right. Yeah. Okay. Yeah, that's significant dollars, right?
Yeah. Well, how much did Walmart bring in last year in revenue?
I think it was around 690 billion, I think, in revenue, somewhere in that range.
Okay. So we're talking about like a little teenager Walmart in what they
Right.
pay out to the rest of the industry.
Right.
Okay.
Yeah. But so I guess if you kind of had to sum it up, as we're kind of taking a stroll through the economy through these 8 companies, if you had to let's say good, meh, or bad, like of those 3, which would you say we are falling into?
I'm going to say it depends on which region you're in. Some regions are like hot, sunny, and 70 degrees, and other regions are in a cold Arctic winter, and that is the economy today. It's a very strange economy.
Yes, I would agree with that. I think that's a pretty good assessment. Some pockets are not great at all, and some pockets are actually cooking. So it just kind of depends on where you land in those pockets.
I'm still shook that you use the word cooking. I love it.
It's spending a lot of time with my daughter. It eventually rubs off. Thankfully, she won't listen to this, so
Right.
I don't have to worry about getting abused for using words I'm not allowed to use.
No more LOL.
No more LOL. All right. Well, with that, folks, we will go ahead and wrap up our conversation for today. I hope you enjoyed our stroll through the economy. If you'd like us to do any sort of analysis like this, or deep dives, or anything of that nature, please don't hesitate to reach out to us at newsletter at einvestingforbeginners.com, or you can reach out on the socials, and we'd be happy to take that task on. So with that, we'll go ahead and sign us off. You guys go out there and invest with a margin of safety. Emphasis on the safety. Have a great week, and we'll talk to you all next week.
We hope you enjoyed this content. 7 Steps to Understanding the Stock Market shows you precisely how to break down the numbers in an engaging and readable way with real-life examples. Get access today at stockmarketpdf.com. Until next time, have a prosperous day. The information contained is for general information and educational purposes only. It is not intended for a substitute for legal, commercial, and/or financial advice from a licensed professional. Review our full disclaimer at einvestingforbeginners.com.